More social media posts from Trump yesterday caused the market to whipsaw higher, recovering about 50% of Friday's big sell-off move. We closed on the S&P 500 up 1.56% at 6654.72. And after today's market action, the largest gamma exposure concentration remains at the 6700 strike. This has been a primary focus of the market for the last couple of weeks. And so this bounce back that we saw today brings that level back into play. If we get back above that level, I think bullish momentum is likely to return to the market. So far, however, we are about 50 points away, and we also closed right on the 50 EMA on the 15-minute chart. So, of course, breaking below that level during Friday's trading session, bouncing back up to that level today. And so we seem to be at a decision point right in the middle of this 50% retracement at 6650. Flipping over to our gamma exposure data graph, total gamma for the S&P actually flipped back positive today, just barely, but it is positive. Meanwhile, the rest of the indices are seeing negative gamma exposure. So the SPY negative 1.1 billion, the Qs negative 228 million, and IWM negative 261 million. So we continue to see the skew to the upside in the S&P options chain. So that's something we're going to continue watching. Looking on a net basis, this 7,000 gamma exposure remains strong, and that is our current year-end target unless we see a breakdown below 6,500. So I think as long as we can hold the lows of Friday down at 6,550 and beyond that, the 6,500 level, as long as we can hold those levels and maintain in positive gamma exposure territory, I think the upside momentum still looks strong, and I think this trend overall will remain intact. So we're at a very important decision point here in the next couple of days. I'll also remind you guys that this Friday is the monthly October options expiration. So it's a big week overall, and we'll be discussing all of this and more in our live stream as well as in our community Discord. I'll put links in the description below if you guys want to check that out.
Thanks, Anthony. Friday's close on QQQ showed GEX to be in extreme negative territory at the close, and that proved to be a good contrarian signal for today's bounce. Now, interestingly, as you know, with the gap up today, the zero DTE picture was a little bit of a challenge. We did see an initial GEX picture that seemingly justified a short position. We posted the GEX picture that showed a large positive GEX cluster at 600 and negative GEX there as well, and a very large negative GEX cluster at 590. Using our time machine, you can see what happened is price moved right up into that 600 area first. So it tested that overhead resistance and actually gave a chance to add. I ended up closing that trade out with a $495 profit. And really, from that point on, the bias was mostly to the upside and then sideways. So not the easiest day to navigate. So let's briefly look at the big picture for QQQ. QQQ is still in a negative GEX position, but we did see an improvement today. And I just wanted to point out a couple of levels that we'll be watching. We'll want to see what happens at the whole moving average at 606.73. Above that, we have 610, which is still a relatively large positive GEX cluster. So we don't know yet if this bounce will end up taking us to new highs yet again, or if it will become something larger to the downside. We'll just have to take it level by level, and we'll look at our zero DTE picture as we enter each day to make that call.
Thanks, Sean. Given the increased level of uncertainty in the near term, I want to take a look at a couple of names that I think might have a higher probability of outperforming here over the next several trading sessions. I want to start with Tesla. Tesla was up today 5.42%, closing at 435.89. And Tesla, relative to a lot of other really high beta names, didn't get hit quite as hard during Friday's sell-off. Gamma exposure remains concentrated at the big 450 strike and the 500 strike, and we can see there was quite a bit of volume at those outlier strikes today. And so that's, I think, important that market participants are still interested in those levels even after the big market sell-off on Friday. Tesla remains well above its 50-day EMA, which is currently sitting at 390.81. We're seeing a pretty strong consolidation pattern over the past month that has formed here right below this 450 level. Now, for our part, we are trading this currently in our portfolio. We actually have an iron butterfly targeting that 450 strike. So we're holding the 425, 450, 475 iron butterfly that actually expires this Friday. And so we're trading at the low lower end of that range, but as long as we can maintain above 425, we're actually collecting profits as each day goes by, taking advantage of that theta decay. Ultimately, though, I do think Tesla is on track for a move towards the big 500 gamma exposure concentration towards year end. And if we just look up the options chain, we can see gamma exposure goes all the way to 600. We noticed the 600 strike started building the past couple of weeks as well. So there's definitely some market participants out there that are looking for a potential breakout above this resistance that Tesla hit last December. And so I think that's a little early to be speculating that far ahead. But if this consolidation period does break out higher, we could see a quick move up to this next resistance level. And then beyond 500, the 600 level starts to come into view. So there's multiple layers here, of course, to Tesla resistance, but it is working nicely through that, starting right around the 450 strike. By the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. And you can also get a sneak peek of what we're trading right now by heading over to our community Discord. I'll put links in the description below to all of that so you guys can check it out.
Anthony, I noticed IWM is already approaching the whole resistance at 244.84. This is the first of the major indices to approach this resistance area. And of course, we have the big GEX cluster at 250 we've been watching for about a week, and that could end up becoming a target this week. One area of interest for me is still down here at 230. Friday's low came to 237. If we did see rejection in this area, or maybe a trip up to 250 and then back down, I would look for at 230 as a possible spot to buy for a year-end rally that could take us even higher than 250.
Thanks, Sean. Next, I want to take a look at AMD. AMD had a huge move last week, jumping up from the 170 level all the way up to the lower 200s, and since then has been consolidating right around the 220 strike. Gamma exposure shows a potential floor of support at this 200 strike, and we see that's also our lower dealer cluster zone. So if we do get a dip down into that 200 level, this is an area where dealers could flip to buyers, giving some added buying pressure to the stock. Zooming in on our chart and just looking up the options chain, we can see gamma exposure is skewed to the upside all the way up to 250 and even higher. And we think the potential for another move later into year end towards that 250 level or above is pretty high. I think we could see further consolidation for the next couple of weeks, maybe even a dip down around this 200 strike. Anywhere between 220 and 200 looks like an interesting opportunity to enter into a long position. And we're going to be looking at re-entering a position on AMD here in the next few days, potentially for that November 21st expiration. Volume in the options market remains strong. You can see today everything was at that 220 strike and higher. So obviously market participants still have a lot of interest to the upside in AMD, and this is one that is way up at the top of our watch list.
Thanks, Anthony. Let's take a quick look at the VIX, which of course had a huge spike Friday, reaching the 18 to 20 area that we were initially looking for, and actually surpassing that, almost making it to this increased positive GEX at 25. We didn't quite get there. We stopped at 22.5. So now what we want to see is if the VIX is going to test this area at 18, which is also pretty close to the rising whole moving average. Very unusual option volume today at the 35 strike. There were about 368,000 contracts traded there. If the VIX does break below 18, I think the odds start to increase that we make it right back to that 15 to 16 zone, and perhaps the market makes it to new highs.
And guys, we're bringing back our special promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We've got a few spots available, but this promotion is going to be ending soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching. We'll see you guys in the next video.